Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, I'm Jeremy Mullen here today for our Top Stock Picks segment. Today I will be doing Best Buy, ticker symbol BBY. Best Buy is the Zacks ranked number 2 buy that is a popular electronics retailer. The company specializes in consumer electronics, home office products, and entertainment software and more. After a big move in 2020, the stock has been trading sideways all year. However, a recent earnings beat and some positive news have investors looking for another bullish run, especially those that are searching for a value play. Before we dive into the stock, let's talk more about the company. Best Buy operates in 2 segments, domestic operations and international operations, which has a focus on Canada. The domestic segment is 93% of the revenues and comprises of all store, call center, and online operations, operating under the brand names Best Buy, BestBuy.com, Geek Squad, Magnolia, and a few more. The company has over 61,000 full-time employees and is headquartered in Richfield, Minnesota. It was founded in 1966, and as of January of this year, Best Buy had over 1,100 stores. Now moving on to earnings, in late August, the company reported Q2 earnings beat of 56%. This was the 15th straight beat. It was a winning streak that started back in 2017. Revenue also came in above expectations, and Best Buy guided Q3 revenues to above expectations. The company affirmed their share buyback of at least $2.5 billion and saw same-store sales up 20% year over year. Now, online sales were down 21% year over year, but this number was skewed due to the COVID surge last year. Management has commented that they expect comparable sales to be flat to down versus last year. Now, like many companies out there right now, Best Buy is seeing supply chain issues and shortages. Management commented that the environment isn't great for promotions because of this, but product availability did improve in Q2. The company expects more promotions in the back half of the year as we head into the holidays, but does see a price increase being pushed to the consumer. Now, looking at the fundamentals, Best Buy has a market cap of $27 billion and has a Zacks style score of A in growth, momentum, and value. The stock has a forward PE of 11 and a 2.5% dividend, making it a favorite for value investors. Despite the supply chain challenges, analysts are lifting numbers across most timeframes. Over the last month, estimates for the current quarter have been raised by 30% from $1.41 to $1.83. For the current year, we have seen a jump of 15% over that same timeframe. Now, since earnings, Best Buy has had some exciting news in a few areas. In October, the company will be launching an e-transportation category online and in some stores. This is a new lineup of electric transportation, which is already available online. It will allow consumers to shop e-bikes, scooters, mopeds, and accessories. Best Buy also announced a partnership with Amazon, in which it will carry a new lineup of Fire TV devices and the first ever Amazon-built TV. Picture a TV version of your Alexa. While this product is exciting, the headlines didn't move the stock much, but the news shows the initiative that the company is taking steps to grow. Now let's look at the charts and the technicals and see where this guy might be going. Okay, here is the chart going all the way back to 2019, and as you can see, it has a nice trend higher with the support line, except for, the COVID hiccup, which took it down below $50, which was the low put in at the end of the year of 2018. So we saw support there and quickly came back as COVID was kind of a tailwind for Best Buy as people got their stimulus checks and ordered online. However, now we've fallen into this kind of sideways trading for over a year now, and we're going to try to see if we can break out of this consolidation. So if we zoom in on this area, we'll see some moving averages, and I have a Fibonacci drawn out and a lot of squiggly lines, and I'll go through those. The red one is a 200-day moving average, the blue is the 50, and the green is the momentum 21-day moving average. As you can see, they're all sideways in this tight area. So we have some massive consolidation here. Looking at a Fibonacci drawn from the lows back in March up to the recent highs, we see that this 61.8% area has held multiple times. That is lining up with this trend line that was started all the way back in 2019. And if we can hold this area and get back above these moving averages, this could be a nice long up to 136. So a lot of this is going to depend on overall market strength and if the market can hold up at near all-time highs. But if it can, I see this spot holding up. For those of you looking for a dip, if if the market does get a sell-off, look for this $100 level to be a nice area of support. So for you value guys, that dividend starts to look really attractive. The P starts to look really attractive, and this could be a great like flush down, scoop it up, get back to the moving averages, and perhaps longer term we get back up here. Okay, that's it for me and Best Buy. Now on to Dave Bartosiak with his pick.
Well, thanks, Jeremy. Now I've got my top stock pick of the week. It is BJ's Wholesale Club Holdings, ticker BJ. It is a Zacks rank #1 strong buy right now. A Zacks value style score of C, growth of C, and momentum of C to help it round out with a VGM composite score of B. Now, the industry isn't doing so hot. The consumer services miscellaneous industry is in the bottom 33% of our Zacks industry rank, but that's not going to scare me off, and here's why. Let's take a look at some of these estimates. Now, first of all, I want to look at these sales numbers, okay? So you only have 3.78% growth for the current year, but that's expected to swell to 6.23% next year. Current year EPS down 7.4%, but next year 777. Lucky numbers on the growth side of things. Now remember, this is a wholesale club, so think about Costco, think about Sam's Club, and the big boost to the business that they got during the pandemic. So it's expected that this year is going to kind of normalize a little bit, but it's good to see that growth is there. Look at this recent trend in earnings estimates. Just over the last 60 days, and 30 days rather, you have 4 analysts increasing their estimates for the current quarter, 5 for next quarter, 7 for the current year, and 7 for next year, while you only have 1 analyst dropping their expectations over the course of the last month, and that was only for the current quarter. Nobody's saying anything negative for the next year, so that's really a good sign. Look at what that bullish trend has done to the earnings estimates. We've gone from 263 for the year up to 286. Next year from 290 up to 309. So that's definitely what you want to see. You want to see those estimates moving in a positive direction because stock price has a tendency to move along with that. Now look at these surprises. Last quarter's 26% surprise, pretty good. Then you have the quarter before that, another 26%, 6%, 43%. So pretty good streak there for BJ's. Also was in Surprise Trader, and we've been reaping the benefits of its latest move higher. Speaking of our services here at Zacks, why don't you go ahead and check out our promotion that we have right now on Value Investor. If you just go to zacks.com/promo, you'll see we are running a promotion on Zacks Value Investor for this week where you get access to rare, exceptional value stocks. That's all I have here for you for Zacks.com. For Jeremy and I, signing off. Have a great week.